Hello everybody, welcome back to the channel. If you are new around here, welcome, and if you are a returning subscriber, thank y'all so much for coming back. I do appreciate it. So we are almost at 10,000 subscribers, okay? 10,000. So again, thank you to all of you who have been talking about the channel, who have been sharing it on your own social media platforms, people who have been sharing it with their family and friends. Like, I seriously do appreciate it. You guys have no idea. So thank you so much. I'm hoping we can hit 10,000 before January 1st. Can we do it? I think we can do it. Okay, so make sure you like, subscribe, so that the algorithm can pick this up, and share if you enjoy the content. So today I have a really good one. I'm going to be talking about 5 stocks we are not going to be buying next year, and that's with an asterisk, but I will explain that later in the video. But I have a couple of announcements. So if you are doing the $1 a day investing challenge, let me go grab that book real quick. I'm gonna pause this. Okay, I'm back. So this is the investing challenge workbook. Now it's a little bit backwards on your screen. I will flip my screen really quickly, but this is what it is. And our pick for December was Walmart. So this is a really good, easy challenge. If you are new to the investing world, I created this challenge in September of 2021. So we've been doing this for over a year. And what it is, because I know I get questions about this, and I do have a playlist on this, but I wanted to show you that, number one, you can invest with small amounts of money, just $1 a day. I'm also a visual person, and I figure maybe other people are visual learners as well. So that's why I created a book to document your journey. Also, I put out polls. So the next poll for January's investment, pick that you all will be voting on will be up tomorrow, Thursday the 20th. I'm looking down, 29th. Okay, so you will see those polls up for those who are participating. December is Walmart. I mean, how many of us were there for the holidays, right? And so again, not financial advice, but I want to show you guys. I teach you how to research. I try to come on and show you our real numbers. Like I said, I'm not a financial advisor, but I am a financial receipter. Okay. Show the actual account. So I want you guys to understand and see that this is possible. This goes in, you can get this on Amazon, the physical book, or the digital is on my website, mt1finance.com, because I know a lot of you have been using this, and thank you so much for your support. But this goes into the next thing I wanted to talk about, and I'm going to make this like a minute or two and move on. And I do have timestamps as well. But I'm going to be making a small change coming January. It's not really a small change, but I am refocusing some of my content, just a smidget. So come January 1st, based off of a lot of the feedback, a lot of the DMs and emails and just comments that I get, I put a video out recently talking about wanting to quit investing or quitting stocks. I got so many responses and messages to that video. I had no idea many of you were feeling anxious and feeling nervous, having anxiety over investing. And so I said, you know what, I got to help my people out a little bit. So what I'm going to be doing, so some changes. The first big change is that you guys know my motto, changing the face of wealth. I say it all the time. But I'm going to break that model down. And for next year, my mission statement on this channel and for myself is building confidence, okay? Especially when it comes to your investing and wealth building. So I'm going to be talking about a lot of how-to videos, okay? So you're going to see a lot of those, like how to invest here, what is a this, how to build this, how to start that, okay? When it comes to investing, I don't want to give the actual titles, okay? But I wanted this to be a surprise, but I wanted you guys to know like where we were going. So a lot of educational based content is coming. I'm going to be doing a lot of in-depth portfolio videos as well, our portfolio videos. I'm also going to be teaching you how to build a solid portfolio for yourself. Another thing that I'm going to be doing that's a slight change is I'm changing my network videos from every month to every quarter. A lot of the feedback that I've been getting for those is that you said you like the stocks and stuff. You don't really care about how much cash we have. So the portfolio updates will still be coming. I have one next week, but we're going to be breaking down those portfolio updates, and I'm going to be talking about market values and share sizes and all of those little fine details that all of you really want to know. So again, on the channel, net worth videos will be coming every quarter. My Patreon folks will see them every month. So if you want to move a little bit faster, like in Investing 2.0, the Patreon is where it is, okay? Another thing that I'm going to be introducing onto the channel starting in January, I'm going to make a video every month about the stock or fund that we're down the most in, because I want you guys to see that, look, the market is bad right now and we are down too, okay? Everything is down, and I want you guys to have that confidence, like, okay, they're down $10,000 in a 401k. She's not going crazy. So if she's not going crazy, I can have that confidence and motivation to continue going. So I wanted to make sure that a lot of the content that I create is still going to be here. The portfolio, the dividends, all of that is still coming, but in detail. And like I said, I'm going to do a lot of educational content as well. I-bonds, all of that good stuff that we have. I'm going to be breaking it down, and I'm going to be sharing with you how my husband and I were able to build it and give you some tips and encouragement along the way in case you want to do the same thing too. So like REIT videos, dividend videos, like detailed dividend videos, more invest with me's where I share my screen and I actually invest on camera with you guys. I'm going to be doing that, and I really am excited about it. So we're 5 minutes in. Let me get to it. I just wanted to share that with you because, again, like I said, that video that I put out, that really was an eye-opener for me. I didn't know a lot of people were having those struggles emotionally and mentally when it comes to investing. So today I'm going to be sharing with you 5 stocks or, whatevers, okay, that we are not buying next year. So the first one on this list is Tesla. Now, the reason why is because we're capped at Tesla. So you got to understand, we have been in Tesla before, like it was so popular. I think Tesla really kind of got popular like in 2020 when we all was home and everybody was on the apps and all of that, like buying stocks and trading and all that. Tesla was around before then. So I think it kind of got popular and everybody jumped on it, but people like my husband and I were in it before it got crazy. And so it split twice, and we have a really good price point, and I think 50 shares is pretty good to cap it at. Now, I will say, if Tesla come down to between a $70 and $90 mark, then all bets are off, okay? Because again, Tesla is a good company over the long term, but right now we're pretty much capped. And I'll be honest with you guys, Elon's focus on Twitter is not something that my husband and I were kind of expecting. We bought Tesla because Elon was involved in Tesla, not Twitter. But there's some other things affecting the Twitter stock, the Tesla stock as well. See, I'm saying it, Twitter, the Tesla stock as well. You got supply chain issues and factory issues over in China. You also have inflation and a recession. So are people going to spend their money on a luxury car, or are they going to just try to make what they have work? You have the interest rates. I mean, come on, it's becoming more expensive to buy a car or buy anything. So let me know down below, what do you think the reason is for Tesla falling so much? I think at the recording of this video, it's like $107, $108, give or take a couple bucks in either direction. But we do like Tesla over the long term, but the reason why we're not really buying it is because we're capped. So, I mean, I always talk about capping your share sizes if you feel like you had enough, and just move your capital somewhere else. So we're happy with what we have, and we're just going to keep moving on. The second and third, because I get asked about these two so much. You guys have no idea. AMC and GameStop, okay? I get asked about these so much. Now, keep in mind, my comments are held, all of my comments, because I don't want any spam in any of my comment section. So I actually have to go through it, and I spend about 30 minutes deleting spam. Side note, some of the spam comments are getting really advanced. Like, I'll think it's an actual legit comment, and then at the bottom, it'll say, like, thank you, Mr. Kevin Jones, for your, and I'm like, oh my goodness, this is spam. So I hold all my comments, I go through all my comments, and then I'll respond to them like the day after, so I can do it all in like one swoop. But I'm not like an investor in GameStop or AMC, and I probably will never be. So I know I'll get a lot of questions about that. I know a lot of traders are in those, but if you are an investor, and this is important, you got to know the difference between an investor and a trader. I am not an investor in AMC or GameStop, probably because it's really volatile, and I don't have the emotional temperament for it, okay? So no, I'm not buying those. We're not adding those to our portfolios, anything of the like, okay? Again, but this is what my husband and I are doing. So again, whatever you want to do is perfectly okay. Again, I always say, make sure you believe in what you put your hard-earned money into. So no, not for long-term, no. Moving on to number 4, this is Carvana. Now, Carvana, I talked about Carvana about 2 months ago in a video about like companies you should not buy, and it's not financial advice, but I mean, just look at, again, I always say, go to a simple chart, like on Robinhood or somewhere, zoom out to the past 5 years. Carvana is like down like a crazy record amount, maybe 75% or more. It really has been losing a lot of money. And so, to me, I like to see a good business model, even if the business is not producing anything right now, because businesses need time to get off the ground. I do think the whole idea of having like a vending machine car business where you can kind of cut out the middleman is a good idea, but everything else about Carvana really is not. And so for me as an investor, I just choose not to put any money in Carvana. Do you guys like Carvana? Like I said, I think the vending machine thing is cool. I've seen the Carvana vending machine in person, and like I said, a cool concept, but again, cool concepts does not necessarily translate to strong business, if that makes sense. And then the last, I don't even want to say stock, but I would say like types of stocks that we are not investing in for 2023 is hotel chains. Okay. And the reason why, let me just back this up a little bit. The reason why I say hotel chains is because I see the tide turning a bit just from our own experience. My husband and I were talking about this. We were looking to book our normal vacation. So I will say this as a side note. We do stay at a hotel when we go to the beach because Airbnbs and things at the beach are just insanely high. And I think it's because it's at the beach. So it's just easier to stay at a hotel because my husband has points. But when we go to on our normal vacation, where we go away for like a week or something like that, I'm always going to Airbnb or Vrbo versus a hotel chain. I think it's because I think the pandemic really changed my thinking with this, is because I have children. I'd rather just cook my food myself, or even if I get like to-go food, I'd rather come back and I'd have to be out among a bunch of people and just eat there. I also love that I can get a house with a pool, with a huge yard in the middle of nowhere. I can see mountains and just I can be near a lake or something like that. And I really thrive on that, especially right now in my life. And my husband agreed too. When he travels, he stays in hotels because that's what the company has him in. But when we travel as a family, and we notice that with other people as well, they are going to Airbnb first. They're going to Vrbo first, or they're going somewhere where that they can like book a house or a nice apartment or a nice condo themselves and have it to themselves versus like a hotel. But again, this is just our thinking going into 2023 and beyond, that the tide is changing, because we can see even with higher interest rates, people are still going on vacation. They're still flying airlines. They're still going on cruises and whatnot. But when they go to these places, they are staying in Airbnbs, or they're staying in Vrbo or something along those lines, or even like resorts versus just like one chain hotel, if that makes sense. So those are the things that we are not investing in come 2023. Now, again, this could change, but right now, it's a no for us. So share down below some of the either sectors, like the type of investments, like I said, hotel chains, or just individual companies or funds that you're not going to be putting your money in for 2023. Make sure you check out my most recent video where I shared 5 dividend stocks we're going to be buying. I got a request to make another type of video like that, so stay tuned. That is coming, and I have some good content coming out soon. So again, don't forget to like, share, and subscribe. Hit the little bell notification so that you don't miss an upload every time I post a video. And until next time, I'll see you on the next one. Bye-bye.